Hello, welcome back. We're going to talk about Reddit, and in this channel, we don't just talk about companies blindly. We have data, we have stories about the companies, we have the actual numbers. So prepare for a crash course on Reddit. Now, in terms of Reddit, I love the company for what they are doing. I like that they are pretty much selling advertising space. And I think that the targeted discussions that they have, like the subreddits, for instance, is a big deal in today's economy. As I've mentioned in the past, data is what I think is super strong in this economy. And of course, targeted acquisition is extremely important. And this is why I made a big bet on Meta, sorry, in the past couple of years, which actually paid us a ton of money for people following the channel, hopefully. Now, we will examine the financials first, examining what the company did in the recent quarter, where they actually gave strong guidance and a $1 billion buyback, which is interesting because this kind of reverses course, and we will talk about this. It's very important. Now, the company actually reported earnings that beat top and bottom lines. This is both revenue and net income, is what they mean by top and bottom. And they actually reported sales of about 600 million, which is more than the street expected of 577. And the 1 billion share repurchase program, which is very important, pretty much buying back shares, making your shares more valuable if you own them. Now, earnings per share is 1.24 versus 94 cents, so beats handily over here, and also handily beat on revenue as well. So what's not to like here? There is also a 1 billion share repurchase program, looking great. Revenue rose 70% year over year, which is insane here. Now, Reddit sales in the US market came in at about 583 million, which you'll notice is the huge chunk of the pie, pretty much. And the daily active users grew 19% year over year, which is also nice to see. And so the company's financials overall look fairly solid here. Yet if we take a look at the doings of the company, you'll see that even after the financials, like the report, this is still kind of going down. So, it hasn't been getting better. It actually has been getting worse, and it has been going a worse trajectory for a long time now. So the path is, kind of going downwards. Now, this is a recent IPO, and you can see the tool identifies that already for us because the data starts at like February. It's like very new company over here, so limited data, but still we have data. And the P ratio of the company is sitting at 50, and you will notice that at some point it was like 200. It's the initial push, like the exuberance over here, where actually everybody is content about buying the stock, and everybody's buying, but it's extremely expensive, and at some point it has to go down, which becomes a potential opportunity as it's sitting around at 50 right now. And notice outstanding shares were going up here, which makes a ton of sense because the board was like, okay, now the stock is very expensive, so we have to sell. And why? Because we need to fund ourselves. We need funds. So when do we fund the company from stock? When it's expensive. That only makes sense, right? Now, as it's going down, they want to be buying back, and this is what they're doing. This is why the $1 billion repurchase is significant. It's kind of their way of saying, okay, we think that the stock now is actually cheap compared to what it was, of course, much cheaper, but also intrinsically cheap. Now, is this true? We're going to examine, of course. But notice that the company has little liabilities, which is extremely important, like they don't have debt and total liabilities for the most part. And the revenue, net income, total equity, free cash flow, all going up, which are things that I love to see. And the margins have also been fairly solid overall, sitting at about 24% here. Okay, so the little liabilities here as well for the company. Actually, even too little in this situation, as you'll see here. So health is usually a little bit more because it's leverage. Like you kind of want to leverage your liabilities a little bit. So maybe they are not getting enough debt in some situations. This kind of points to that here. It's not of course bad, but you need to know about it. Now, if we take a look at the financials of the company, you will see that we have obviously very little here since the company is a new IPO. But recently, as you saw, we're sitting at about 2.2 billion in terms of total revenue here, and the net income of about 530 million in the last 12 months. Okay, things are looking solid here, but of course, we want to know what's happening with the actual stories of the company, because now we saw the numbers and we have an idea about the numbers, but what is actually happening in the actual operations of the company is extremely important. Now, you will notice that 94% of revenue is one ad budget cut away from trouble. And this actually, the AI has marked the situation where the whole company here is really, really driven by ads, which is powerful but ad sensitive. And it's skeptical because exceptional growth is concentrated in advertising. Now, that's not necessarily bad, but it's something to be careful about. And obviously, the vast, vast, vast majority of it is the US market. So, if something happens there, you could have some trouble. There are some more things here about Reddit which are very, very important. Like, for instance, the swing to 500 million net income was heavily aided by the normalization of stock based compensation, what we saw earlier. And you can actually see that in stock alerts very, very vividly here. If you take a look at the stock dilution, the share dilution, you see it immediately in the stock compensation. It's getting better, but it used to be worse. Like this is a 5 now because it used to be much worse. But the latest in the latest quarter is getting way, way better. And of course, with the actual buybacks, this is also going to get better here. We'll actually talk about this a little bit later. But the AI deep dive tells us very, very important things here. So, for instance, there are issues about potential AI licensing things, like for instance Dutch regulators here, and of course you can study the details if you want to see, because the EU privacy regulatory risk is there for companies, as it's way more strict in Europe right now, obviously for regulatory stuff. Now the your taxman wants a cut. This you'll see in most companies. You cannot avoid it, so it's not a huge deal. But there are other issues about the company. And the big thing about it that I have actually discovered through researching and seeing all the information that I can get from the tool is that they have even had a lawsuit for actually it's over here. They had a lawsuit for downgrading the impact of Google's AI related changes, because nowadays nobody is actually looking at search results, and a lot of the traffic from Reddit comes from Google. A lot of it is Google traffic, and if users don't find it from Google, then the user base could actually dissipate a little bit. Now, with Reddit, I mean, it's communities that people actually follow, and it's not only something like Stack Overflow when you actually go there to find answers only. It's more about the discussion with Reddit. But this is important. You will notice that a number of companies have been hit with AI washing securities class action lawsuits, alleging that the defendant companies overstated their AI related capabilities or opportunities. And so, in a new securities class action lawsuit that reflects these kinds of risks pretty much, they sued Reddit, alleging that the company misled investors by downplaying the impact on the company's site traffic and ad revenue from Google's adoption of artificial intelligence search results. Very, very important to note this one. It could actually play a role and have an effect actually on Reddit, which is important to know about. So that is a thing that kind of scares me a little bit. Now, I think that Reddit is different, of course, than what Stack Overflow is, which is basically a graveyard right now. But it's something that you really, really want to know about and consider when you are potentially thinking of buying the company. And this could be one of the core reasons why the stock is actually down quite a lot. Now, there is tons of cash in the bank, but of course waiting on checks to clear, meaning there is receivables over here to be received, as you can understand. Sales are booming mostly because users are worth more. It's not so much about new users is what this is saying. It's mostly about the users are worth more, and especially US users, as you'll see, while other people in other countries only bring $2 out of 10 that the US users bring. What I told you earlier, remember, the stock market, the US market is huge here for Reddit, and it's actually there. If it were to be gone, they would lose a ton of money. I mean, of course, it's not going to happen, but you can see that they are very concentrated here. Now they turn the profit, which is like a gap swing here. You can understand that companies that are new, they used to have like adjusted profits, adjusted non-gap sort of stuff, which makes math a little bit messy, but you can see that the company is doing better overall. Selling data is a gold mine, of course, not so much compared to the ad revenue that they are making, but they're still making money on this. And the government is watching, as I mentioned earlier, regulatory stuff. And they're buying back their own stock, but you still don't have a vote. So the board said it's okay for the company to buy back 1 billion of stock. They have the cash to do it and all that. Now, you don't have a vote because you don't decide that. The board decides that. And the thing is it a good idea to actually buy back shares right now? Is it cheap enough to be buying right now? Should they be waiting? Is what is being questioned here. Not easy to say necessarily, but I can see why the board would want to buy back some shares in this situation. Maybe they're buying too much. 1 billion is a lot compared to what the company is doing, I think. But it makes sense. It makes sense because of what the company has been doing in terms of their math, pretty much, to be buying some stuff here. And of course, we have the details here with um, all the information here about Reddit and all the questions and answers that the tool has replied. And I've actually haven't checked that at all. Let me see if it's mentioned at all here about Google potentially. Yeah, there are some information here about the search opportunity. Yeah, this is very interesting. Okay, I haven't seen that before making this video, but actually it mentions Google here. It's very good, very good to see, because there is traction from the AI that we talked about earlier and Reddit answers. So yeah, all this is extremely important, and you can study it on your own if you want. Now remember, you can access the tool at stockaiinsights.com. I'm actually using the local host here because I was doing some changes. But yeah, you can find all this information and read the questions and answers to see the details about what we have been discussing. Basically, the tool tells you everything just by starting here. You can start with the quick takes, then take a look at the key stories, and also for finer details, you see the Q&A analysis here, where you can actually do like focus and examine exactly what you want just by searching what you want. So it's super, super nice. I love actually doing my analysis here, because now we have actually seen what the company does, not only what they make in terms of their numbers. So we can make a much, much more calculated decision about whether we actually want to invest in this company. And you will see that they are doing better, obviously, everywhere, like the trends, the margin trend, for instance, the capital efficiency, incremental margins, earnings quality, all these things are getting better and better as it's progressing. Yet the stock is going down again because of it being overvalued. And I've mentioned about it in the past. You don't want to be buying overvalued stuff when everybody's buying. You want to be buying when everybody's getting rid of it. And this is kind of the situation over here, with all these numbers here looking very, very solid and super safe zone for bankruptcy here, obviously because of the little liabilities. D, as you will see here, and you can see the finer details because I have actually made all these cards with all the details that you need to know. This is market cap divided by total liabilities, and since the company has very, very little total liabilities, this is a high number, which is something that you like to see, especially if you are actually investing in a company that is very new. So we have good things to see here. I always examine insider trading because I want to see if the CEO and the CFO are actually getting rid of stock. Now, getting rid of stock has two facets. It's getting rid in a pre-planned sale, which is fine because it's compensation. People want to get paid. But if you see discretionary sales, things are a little bit weird because they may want to get rid of the stock fast because of something they learned. And this hasn't been happening in the recent quarters, which I like to see. So nothing really gives us an alert pretty much here. These are all pretty much normal. 10B5-1 is the pre-planned sale. So all of these key executives have had this kind of activity, which is really nice to see. Last thing we check is the stock evaluator. Actually, we cannot check that. Yeah, it's a recent IPO. We have very limited data. Yeah, that makes sense. But yeah, this I could actually potentially even do it with one, but it's gonna be a little bit weird. I'll think about it. Maybe I will add it if it's like 2 years of financial data, maybe. But it's gonna be limited because we are not gonna be having a lot of data to play with for the company. It's gonna be skewed, is what is happening. I could still do it. All right. So yeah, tell me what you think about Reddit. In my opinion, this is getting better. Now I told you explicitly about what I think is wrong here with the company in terms of their doings. The main things, for the most part, is they have a little bit of risk because of AI, but on the other hand, they have these concentrated, like really, really specific targeted subreddits that are a goldmine, and advertisers really, really want to advertise on this. Absolutely. So these are not going away anytime soon, but they could have some acquisition troubles because of the AI automation, pretty much, that Google has. So this is a concern, of course. The concern has also been the previous valuation. It's still not cheap, but it's much cheaper. Now, I would think that if it goes down a little bit more, it could be an even better situation. And if we have like a mini crash or something, which could easily happen in the next few months or so, you could easily see that going down to 100 very easily. And in this situation, like somewhere around there, this would be a very, very interesting opportunity. But you have all the concern that this could potentially have some troubles with the AI. Now, do I think that will happen? Probably not, because I think there is a lot of value here with Reddit, which I think is going to be growing nicely through the years. Again, I really, really believe in this data economy. And I have talked about it in the past. Like Palantir was a stock that I bought when it was like $17 or something. And I was talking about it, or even less. I don't even remember. So, yeah, this data economy is important, and you have to play on it. And the AI, I think, is going to be huge. I'm actually on the side of people who are thinking that AI is going to be massive because I've seen how it works and I've used it extensively myself. It's just tremendous, and the value it produces is insane. So I think that focusing a little bit on AI is important, and this is why I'm a little bit hesitant here in terms of Reddit, because a lot of acquisition comes from like searches and stuff. Again, Reddit is different. It's a platform that has like communities, so it's kind of like Meta sort of, with groups and stuff. So I think it's gonna be sustaining themselves nicely, and I don't expect them to have significant trouble. I think they're going to be resilient pretty much. Tell me what you think. Leave a comment below. This is a very interesting company, and we can discuss about it. I'd love to hear your opinions. It's again multifaceted. You can have different opinions and be correct, absolutely, because there is something to say for the bearish and the bullish side for this company for sure. Thanks for watching, guys. I'll see you in the next one. Bye bye.